welcome to the latest edition of The Exchange, brought to you by the New York Stock Exchange. I'm Douglas Jonas, your host. As a reminder, today's interview is for informational purposes only. The NYSE does not recommend investments or investment strategies. I'm live on the floor of the New York Stock Exchange and joined today by Richard Bernstein. He is the CEO of Richard Bernstein Advisors. Rich, thanks so much for being here.
Doug, thanks for the invitation. It's great to be with you.
Now, your firm, RBA, and IM Global Partner just launched a brand new ETF this week. It's an ESG-focused ETF. Could you tell us a little bit about this new ETF?
Yeah, so IRBA is a kind of a core asset allocation holding that focuses on ESG. You know, my firm, Richard Bernstein Advisors, has been around for 10 or 12 years, and we are one of the biggest ETF originated asset allocation firms. What we're now able to do is now bring that to an ESG format. So it's a core asset allocation holding that focuses on ESG.
Now, ESG, sustainability, I mean, these topics have been around for a few years now. Why now? You know, why launch this ETF today?
Yeah, no, great question. So we are a back row firm. That means that we know nothing about individual companies. We do no individual company research. Rather, we drive performance of our portfolios through size or style or asset allocation, something like that. And the problem for us was that the ESG universe of ETFs was very small and very concentrated, really focusing more on divestiture of energy than anything else. What we needed was a broader range of ESG ETFs and more depth to them. And we finally have that. After several years, we finally felt that there was a broad enough and deep enough universe of ESG ETFs for us to actually do what we do best.
So obviously a number of different definitions on how we talk about ESG. Is there a specific way that this ETF is defining, screening the idea of ESG?
So what we're doing, Doug, is we're using the expertise of the various companies that create these ETFs and the metrics that they're using. So we're not making a decision is one way better than another. We're relying on their expertise and trying to couple that with our expertise in asset allocation. You know, you got to know what you got to know.
So I'm standing at the floor of the New York Stock Exchange, very volatile day today. What do you make of the current market situation? Where are we headed?
Yeah, I think, Doug, that it's really pretty straightforward that a lot of stocks have done exceptionally well because they really focused on very long time horizons. And the Fed was distorting the long end of the yield curve. And so as the Fed distorted the long end of the yield curve by buying so many treasuries, they distorted the valuations of any asset that priced off the long end of the yield curve. Well, we're now starting to see long-term interest rates rise. And as we see long-term interest rates rise, we're seeing those kind of long duration stocks suffer as well. It's really pretty straightforward as to what's going on. And fortunately for our portfolios, we haven't been overweight those long duration assets.
Rich, for someone who wants to learn more about you guys, RBA, the ETF, where should they go?
So iMGP has a website, RBA has a website. Our website is rbadvisors.com. There's plenty of information there, as well as all the major, stock and ETF databases have information as well. So there's really a lot of information out there for investors.
Sounds great. And as a reminder, if you caught this episode live, you can find a lot of additional ETF thought leadership on our website, homeofetfs.com. That's homeofetfs.com, all brought to you by the New York Stock Exchange, the home of ETFs.